Bitcoin produces certainty. The fiat system, even when we look at interest rate monetary policy for the Federal Reserve, they're always trying to maximize uncertainty. With fiat, you have maximum uncertainty on the supply side. They can print $1 trillion. They got infinite cash, as Neil Kashkari said. On the Bitcoin side, it's maximum risk because the supply is fixed. Fiat is a uncertainty maximizing system. Bitcoin is a risk maximizing system.
All right, Pierre Rochard, welcome to Bitcoin for Millennials.
Hey, thanks for having me on, Bram.
Yeah, I'm excited to chat. I just told you before we started, I recently remembered that I read one of your older articles from 2013 or 2014, I think, somewhere in 2015. I always think it's really nice to connect with people that also, taught me something on my journey. So I definitely want to talk about that, like how you look at that article now. So I'm excited to talk. And yeah, I basically wanted to start with, I think I can call you a Bitcoin OG, as someone who's been studying and contributing to Bitcoin for over 10 years. I just want to start with the question, can you share why Bitcoin is such a big idea?
Yeah, I think that Bitcoin's such a big idea because the product itself, money, is a big idea. And so in a way, monetary economics did not have a theory for something like Bitcoin before Bitcoin existed. There had never been a finite money supply like what Bitcoin offers. And the other part that why it's such a big idea is on the other end of kind of the system itself is the open source nature of it. And so the intersection between money and open source software, I think that's what makes Bitcoin just so unique, so unprecedented, and so huge. And then everything else is downstream of that.
Yeah, I love that. I think the fact that we are just now having the conversation, or at least, from the history that we are looking at, maybe people talked about this before, right? But why is there a small group of people that decides about the value of the technology we use to, exchange value with each other? It just sounds like a weird idea. It doesn't sound like a logical idea, right? And I think that's been one of the things for me. Like, I don't have a finance or economics background. I just ended up at this point where I think, Bitcoin is the most important technological thing that anyone has to study just by rational thinking. Like, it's a very logical explanation as to why Bitcoin should exist, and why fiat money should exist or stay in existence is not that logical, right? Like, there's so much obfuscation and abstraction needed to try to convince us that it should still stay like this.
Yeah, absolutely. I mean, people accuse Bitcoin of being too complex, but when you look at the complexity of the fiat financial system, but also, as you mentioned, the intellectual roots of it, people have criticized Keynes for essentially writing nonsense, and it's impossible to read the general theory in a way that is logical, and that's just by design almost. Is that this is the fiat monetary system is not justifiable on intellectual grounds. It's only justifiable on political grounds as a means of expediency.
Yeah, I love that. How was that for you to realize that?
Honestly, it was kind of disturbing. It was when I was going, this was probably junior year of high school. And up until then, I had kind of accepted everything that I learned at school to be true. And junior year of high school, I was taking an economics course, and this was in France, and it was very, very Keynesian, right? Then when I learned about the Austrian School of Economics, and I learned about what their perspective is, specifically on the business cycle and on monetary economics. And that's kind of the first time where it was in my head that I have to choose between what do I think is true and what am I being taught in school.
That's rough at that age, don't you think? Yeah.
It's. I think it's Some people go their whole lives without ever, encountering that question, or they choose a different answer than I did, which was like, okay, well, I'm going to go with what I think, and then I'll argue with people about it.
Yeah.
But I've always enjoyed debate, and so to me, it's almost a blessing that I have so many opportunities to debate a lot of different issues that I find fascinating.
Yeah, I've of course listened a lot to Safety No Moose talking about these differences, and yeah, again, like the only economics class I had also was first or second year of high school. Basically, we did a lot of calculations, right? But we never talked about what are we actually calculating with, and what is money. But when I hear people talk about this Austrian school, yeah, again, it's just so rational. It makes so much sense, right? It's like, let the people do what they want, the whole human action thing, and they will figure it out together. And I feel like by imposing rules on people, ever-changing rules that benefit the people creating rules, yeah, we are kind of like forcing human nature in this direction that it naturally doesn't really want to go, But when we discuss with people, about money, a lot of people say, yeah, a little bit of inflation is good and stuff. I find that a difficult question to answer. I just say like, well, and they say deflation is bad. And then my reply is just like, well, if you're hungry, you buy a bread, right? If you need a house, you try to look for a house. If you want a car, like, are you going to wait 2 weeks before, the price went down? I don't know. Like, how do you address like these differences? Because not a lot of people think about this Austrian school, of course.
Yeah, so I think that deflation is bad and inflation is good when you have a fractional reserve banking system. And that with deflation, if the value of the debts is going up, then that's just going to be bad for the debtor. And furthermore, from the banking perspective, they create money by lending it out through the fractional reserve system. And so I think that the entire inflationary system, in a sense, is geared towards benefiting the commercial banking system. And it's a completely, captured interest. So if we remove that part of the puzzle, if we remove the fractional reserve banking system, then it's obvious that deflation is just people's purchasing power increasing. And whenever it's phrased that way, I know in France they talk about the pouvoir d'achat all the time. What's your purchasing power? Well, they always want that to be increasing. But then when it comes to talking about consumer price inflation, they always say, oh, well, we need 2% consumer price inflation. And so I think that the other deflationary part that is really doesn't work for folks is with regards to the state. And so the state benefits through seigniorage by having a monopoly on the currency and being the only issuer of it, that they're able to capture all that value. And that's to our expense in the form of inflation. But they want it to seem like, oh, it's to our benefit in the form of inflation. So I think that the vested interests are essentially the banking system and the state working cooperatively to create the fiat system. And that when we look at the ideological kind of justifications for inflation, usually what it gets reduced down to, it's not, so the surface level one is like what the IMF was saying with the chairs. If prices are going down, then people won't buy chairs, and then there will not be a chair industry. And then if prices are going up, then people will rush out and buy a chair right away before the price goes up more. So I think that surface level theory is very popular, but within mainstream economics, if you talk to competent mainstream economists, they don't think that theory is explanatory in the sense that, like, if they understand what happened with computers, right? That the price of computers went down. People still buy computers because they still want the utility, even if that means that they will miss out, on improved purchasing power later. Yeah. So what the part of the theory that they really hang their hat on outside of the banking system, because I don't think they even really understand that intersection is with wages. And so they say that you want to have increasing wages so that you don't have unemployment, and that you have wage stickiness, essentially, where if you have deflation, then people won't accept jobs because they want to make more money, not make less money. And so you'll have higher inflation. And it's basically this trade-off between saying that we want to have less unemployment and lower wages instead of higher wages and marginally more unemployment. So I think that this really illustrates the wealth inequality issue. Like when people look at the wealth inequality since the 1970s, it comes down to the fact that with inflation, the workers have to go ask for a raise proactively, whereas with deflation, it's the employers that have to ask for wage cuts proactively. And so it just gives, one party power over the negotiation. If the default is to just let it stay, then the default is that the workers win with deflation. With inflation, the default is that the employers win because of the wages. So that, I think, is essentially the case for inflation. And I think it's a really weak one. All right. I think that people, they understand the fact that the value of their wages has gone down over the years.
Are you looking to save in Bitcoin for your retirement? Meet OnRamp, the leader in Bitcoin financial services. OnRamp has just launched the industry's first Bitcoin IRA with multi-institution custody. That means unparalleled support, transparency, and peace of mind for your retirement. With OnRamp, you can verify your assets directly on-chain and protect them with the support of 3 independent institutions, eliminating the risks of a single point of failure. Are you ready to take control of your Bitcoin retirement? Visit the link below or go to onrampbitcoin.com to learn more about OnRamp's Bitcoin IRA.
Yeah. I think this is a great example of how the narrative, like the incentives are flipped, right? And because they are flipped, they try to mask that with talks about, don't you want your salary to go up, right? And stuff like that. And that sounds great. If it nominally goes up, then of course I would be super happy. But if the stuff you want to buy goes up even more nominally because you are participating in this money system, then you don't see the effect of you accepting this higher salary that looks great in your eyes, right? And they have to, that's what I love so much about Bitcoin. They have to keep talking and masking and explaining and thinking about all these narratives, where the Bitcoin narrative is really just one narrative, right? This thing stays the same as it is advertised. It's a stable thing. One Bitcoin is one Bitcoin. And that is, I'm oversimplifying, but that's the thing, right? So if you want this as your money, you can be rest assured that it will stay the same forever. And that's just it. We don't need all the stuff that they're trying to pull. And we are walking our walk, basically. It's the proof of work that's in Bitcoin there.
Yeah, absolutely. I mean, Bitcoin produces certainty.
Yes.
And the fiat system, even when we look at, for example, the interest rate monetary policy for the Federal Reserve, they're always trying to maximize uncertainty. They don't want people to know what they're going to do. That way they're able to manage those expectations and be able to shift economic activity around. And so it really is, it's like the just polar opposites, where with fiat, you have maximum uncertainty on the supply side. So meaning that they can print $1 trillion, they got infinite cash, as Neil Kashkari said. And then on the Bitcoin side, it's maximum risk because the supply is fixed. And so it's really, in Austrian economics, they talk about uncertainty versus risk. Fiat is a uncertainty maximizing system, and Bitcoin is a risk maximizing system. For now, I imagine perhaps if we reach 100% adoption, then the price volatility, the purchasing power volatility of Bitcoin will decrease.
Yeah. I think this is a nice leeway in talking about this article that's called Speculative Attack, right? And in this article, you explore how Bitcoin could exploit this weak fiat currency system. I think it shows incredible foresight because people are doing what you proposed in that article right now. You know, people like Michael Saylor. How has this theory evolved since you first wrote it? Or, yeah, is it just basically still valid?
Yeah, so I wrote this based on another paper that was written by, I believe it was an academic lawyer who was consulting for the IMF. So this is like 2013 that he wrote a paper about Bitcoin speculative attacks. And I disagreed with the logical explanation of the process that he had. And so I decided to write my own. And it really answers the question of what's the end game, right? How is it going to be the case that Bitcoin is just going to be this asset that lives its own life, but does not ever replace fiat? Or is there some kind of mechanism that we can observe, but historically, but also, praxeologically describe that would cause one currency to replace another? And so, we have political processes like the euro replacing European currencies. But then there's also market-based processes of dollarization and speculative attacks. So in a speculative attack, it's really about exploiting the weak monetary policy of one currency in order to short it and to benefit off of its devaluation versus a stronger currency. And the only way to defend against the speculative attack, which I wrote about in the article, was either to strengthen the monetary policy of the weak currency by raising interest rates, which can cause all sorts of other problems for the domestic banking system and, of course, for the politicians in that situation. The second is capital controls, where you're saying, okay, we're going to keep the interest rate the same, but we're going to introduce political factors into describing who can have access to this credit so that we can slow down money supply growth. And so here you would say, okay, you're not allowed to borrow the weak currency to buy a luxury car or to, buy a mortgage greater than X value.
Mm-hmm. Sorry to interrupt, but so they want to prevent you from using other assets as a better money than that money, right? Like they're forcing you to keep adopting it.
They want to prevent you from creating more of that local currency through the commercial banking system. So they're trying to throttle the commercial banking system, not by raising interest rates, but by changing the conditions or the prerequisites or what the end use of the credit can be. That way they can slow money supply growth and tackle inflation through a political rationing process rather than a market-based rationing process. But to your point, the form that the capital controls can take could be, for example, to say that, you cannot borrow against your Bitcoin, or you can't borrow against your stock portfolio. That way they are able to reduce credit expansion while also making sure that it's targeting the people they don't like, the speculators, the evil speculators.
But would you agree that it then stops being money, I would say? Or, well, according to the classic definition, perhaps. But like, if they start exerting these controls, does it stop being actual money?
So, I don't think it changes anything definitionally, but I do think that it's effective in the sense that if you're trying to stop people from using Bitcoin to borrow dollars, you can freeze people out of the banking system. And we've actually seen some of that here in the U.S. in different forms. So I definitely think that if it's used in a targeted manner, it can be effective. Usually it stops being effective when it's all they're relying on. So they have a very loose monetary policy, but then they're trying to clamp down on all the capital controls, and then people start engaging in money laundering, and that becomes profitable. But the third, which I did not describe in the article that I should have mentioned, is actually what was discussed in the IMF paper that I was elaborating on, which is to accumulate a reserve of Bitcoin. And then that way you're able to have a credible way of defending your monetary policy against Bitcoin by the threat of selling the Bitcoin. And so I think that it's the option value of holding the Bitcoin that is the most kind of the most important thing to focus in on, because if we look at it in a vacuum of, okay, you're going to print dollars to buy Bitcoin, and then you're going to destroy dollars by selling Bitcoin, that's a net zero. So why would it have any effect on the credibility of your monetary policy or anything else? Well, then that's where I agree. So we have to look at it in a more holistic manner of, while you are holding the Bitcoin, you have this option value. It's almost like mutually assured destruction, for nuclear weapons, of just by holding it, you don't have to use it, just because you can threaten to use it. And so that, I think, it's not only true at the sovereign level, I think it's actually true at the, independent, individual sovereign level, but also at the corporate level of like MicroStrategy.
Yeah.
So this is why I think MicroStrategy, their stock price has gone up. Their bonds are doing very well. It's because it is backed by the best asset. And that there's no reason why you couldn't do that at the government level to head off a speculative attack. Now, then we can get into kind of, well, is that what they're actually going to do or not? I don't know. They might not be smart enough to do it. Yeah. But also, essentially, that means Bitcoin wins. Because at that point, it's a layer 3 scaling solution of, okay, their currency is backed by Bitcoin indirectly, but enough to essentially constrain them and to help the people of that country have access to Bitcoin. And so I think that, it's not perfect because it's custodial and all of that, but it's the first step towards total Bitcoinization. And, I imagine that even if you get one government that is smart enough to set up a Bitcoin reserve, how many decades before you have a bad government that goes out and spends all the Bitcoin reserves and essentially redistributes the coins out into the public, and then people get rugged, and then they say, okay, not again. I'll buy a cold card and I will run my own node and, be a first-class citizen on Bitcoin instead of relying on government currencies. Yeah.
I love how you can start in one dimension in Bitcoin and like end up like we do now in the game theory part of Bitcoin, right? Yeah. I also think it's very interesting, by the way, that, the IMF wrote about Bitcoin in 2014. Like I always say, it's still fascinating, like right now, that 15 years after this random idea was released on a random internet forum, it's this big, right? But imagine after 5 years, the IMF starts paying attention. For me, that is a very high signal. Especially last week, we saw someone from the IMF talk about, how El Salvador is treating it. And they were saying like, they should lower exposure and this and that. It must be fascinating to work at the IMF and see this thing evolve and be like, damn, it's still there. Like these. I just find that very, very interesting that they are paying attention. I think that's kind of the signal here. Like it's a real thing, because how many random internet ideas get released on the internet every day,
Yeah, a lot. And I was always interested in open source software, even before Bitcoin came along. And I remember in 2011, I downloaded Bitcoin. I had read an article, I think it was in Wired, about mining. And so I wanted to I had a GPU. I thought I could mine. But when I opened up Bitcoin, I didn't see like a button to mine, so I just closed it and moved on with my internet travels.
Yeah.
And then it's not until kind of the second time that I saw Bitcoin that I really dug into it. And so I think that people have a natural mechanism to qualify what they might think is interesting. And so for me, like the first time I see something, it's kind of almost noise. And then the second time, if I see it again, then I'm like, okay, well, maybe there's something that I should look into here. I had this same experience with Lightning, for example. When the Lightning white paper came out, I was pretty skeptical. I didn't think very much of it. And then it wasn't until I saw it mentioned several times that I thought, oh, okay, well, maybe there's something that I'm missing here that is actually interesting.
I think it's also part of our generation in a sense. Like what you just said about internet travels is always how I saw my youth. Right? Just trying out different stuff, like what are people working on? What are people spending time on? What's eventually sticks? I was really into this, Kazaa, LimeWire, downloading songs, burning them on CDs, selling them in school, right? But you would see from time to time, like Napster died, and I think either Kazaa or LimeWire came up, right? And you saw that grow, that got like it was kind of like this battle on the internet, basically, right? And with Bitcoin, I totally refound that feeling with myself that I had also at that time, right? Like it feels like this is a pioneering thing that's like just growing through the internet, but it's just way bigger than anything that I've seen in that time, like 13, 14, 15, when I was that age, which is already like 20 years ago, right? But you see that it goes faster and faster, and people are also, I kind of want to say like more open to ideas, but internet culture is has become like the real life culture over all these years, and that's why also one of the things why I just think like this is going to work. Like we are manifesting this thing into existence.
Yeah. For me, part of my conviction on Bitcoin on the open source side is driven by seeing Linux grow over, my lifetime on the internet. That it went from being a hobbyist project to powering most of the world's servers and lots of phones as well. And so in my mind, part of what Bitcoin's success will be about is that people will be able to use it as their payment protocol, as their that standard. And that eventually because it's so much easier to set up than Stripe or anything else, that where you have to get permission and you have to have a physical mailing address and all of that. It'll just be a default on a lot of things. And then if you want to use Fiat, then you have to essentially upgrade. And so I think that the software side of things of becoming kind of the standard protocol, I've experienced this the most in my life with SQL. This programming language for data that was invented in the 1970s and has basically not changed for
like JavaScript is similar, right?
Similar. Yeah. And lots of people have tried to replace it, but that's where, I do think that there's things that last, right, that are Lindy, that it makes a lot of sense to bet on, even if you don't understand what's going on under the hood. It's almost like, hey, if this can survive 50 years and the best software engineers are still using it, obviously I don't need to overthink it. I don't need need to double second guess it and say, oh, I'm going to invent my own.
Well, it's also because it has happened before, right? So in that way, it is nothing new. But I love this idea of it's going to be a command line prompt, right? Yeah. Okay, it's a command line prompt. Install this Bitcoin node. Boom, I'm done. That's what the future computers will have. Even
it would already be installed, right? And you open up Windows and Windows has lots of services, and one of those would be a wallet, and that's just natural for people. even with Apple Pay, for example, like I imagine that Apple Pay will have Bitcoin integrated, and it might be sooner than we think.
Yeah. One last question about this kind of like game theory and the speculative part. So what I find really fascinating, again, right? Like 15 years ago, you had this random internet idea. Now, a company like BlackRock, a winner of the traditional finance and fiat money space, has adopted Bitcoin. Kind of like my theory around it is that it's kind of like similar as how George Soros did the attack on the English pound, right? Like, why would a winner, an incumbent who is usually late to new innovations, right, and disruptive technology, why would they adopt something like Bitcoin? Kind of like have like one leg in the fiat boat and one leg, in the Bitcoin lifeboat. And when you see someone like Larry Fink on TV, from my perspective, someone who's not going to repeat what some PR person wrote, right? So it's his words. Or you see Robert Mitchnick, who's head of the digital assets part, like talk about Bitcoin. I think they really get it. Like they really, really get it. And I don't know if this is happening, but I would argue that like if ETF customers are selling their Bitcoin ETF share, I think BlackRock is buying, that Bitcoin. That would make the most sense if you understand Bitcoin, that they would keep that stash for themselves, right? And yeah, I just want to ask you, like, what do you think about that thought? Like, are they building their own lifeboat with Bitcoin? And eventually, when push comes to shove, right? Like, if the dollar really fails, I don't know if that's going to happen, but then they will have some sort of power position because they have this Bitcoin stack.
Yeah, absolutely. So I feel like the reason why BlackRock has really embraced Bitcoin is because we can divide Wall Street into two different groups. One group is trying to generate alpha, and so they're promising returns that are greater than the market, and they're going to actively manage things and trade things. Then the other half of Wall Street, they just charge a very low flat fee, and they're just going to give you a market return, and it's passive management, and they're not trying to, trade. So I think that the passive group is very interested in Bitcoin, and then the active group, they either hate it or they see it as a Beanie Baby tulip mania thing that they can trade. And so because Larry Fink, like, he doesn't care if BlackRock's clients lose money on bonds, in the sense that he's not paid to outperform bonds or to somehow prevent that from happening for his clients. Instead, he's basically a custodian, right? That these assets have been given to him under management, and he's just going to administer them, but he's not actively like managing them and trading them. So for them, the other part of it too is that because it's their customers that are making the decisions, and they're just acting on the behalf of the customer, that means that if their customer comes to them and says, "Hey, I want to hold Bitcoin," they have to, from a market perspective, if they want to continue to be leaders, they realize they have to be responsive to that. Whereas the active traders, that's not really, they don't care what the customer thinks, in the sense that the customer just wants the higher returns at the end of the day. So it being customer driven, there's just lots of people who have been asking for an ETF for a very long time. The SEC had been blocking it. And so in a sense, there was a lot of pent up demand for this Bitcoin ETF. And I think that maybe the SEC did us a favor by causing so much pent up demand that it really made BlackRock look at it and say, "Oh, okay, well, we should definitely have an ETF here." The moment that it's possible. What I found really interesting about what Larry Fink said was that Bitcoin is bigger than governments. And I think that that's a sign of a true orange pill.
That's what I mean. Yeah, exactly.
That's when things have clicked, and that it's a new world order that is being established here. So, I think that Bitcoin adoption is very individualistic. So,
I agree.
Michael Saylor adopts Bitcoin and starts leveraging up his balance sheet, but why not Apple and Tim Cook, right? Why are there no people said, oh, Michael Dell, you should do this. There haven't really been anybody trying to compete with Michael Saylor at that level. And same thing with El Salvador. El Salvador announced, and then we didn't immediately see lots of other countries announce, oh, we're joining the Bitcoin standard. So I think that even if Larry Fink and BlackRock are early adopters, it's almost by luck that they're the biggest, asset manager out there, and maybe there won't be any other, or that the growth from it, that we might be too bullish on the growth of it, because it's not like he waves a magic wand and trillions of dollars go into Bitcoin.
Yeah, well. That is true. I do also think it goes slowly because it's this individual kind of like mind virus. But yeah, as you said, when you hear him talk, that sounds like someone who's personally orange pilled, and you see still like the cautious language, right? If you think your government spends too much, kind of like that, right? Like he talks in a safe way, I would say, right? In a risk department approved way,
right?
But also, I saw you had a tweet where BlackRock shared like 4 points or something why they believe in Bitcoin, right? And you said something about like 2 points you didn't agree with, because they say like the growth comes from shocks in the financial system, etc. And you said you disagreed with that. Like I agree with you, because it's a slow, continuous thing, because once you understand then that saving in Bitcoin is the most superior way to do that, then that will be the shock, right? for yourself, and you will go all in on it. So even in like those little like brochures or PDFs that they share, it's still safe language, right? It's not Bitcoiner language that they speak fully yet.
Not fully, no. They'll get there though. But I actually, maybe I was too harsh on them, because I did think their research was good, and that
I think so too. Yeah.
I think that it's an individual process, but I think that there's also the quantity of times that someone hears about Bitcoin. Like I was saying earlier, for me it was basically 2 times, and I'm in. For other people, it might be like 50 times, right? And so they need both Larry Fink and Donald Trump talking about Bitcoin a few times, and then eventually they'll buy the ETF, and But the other part of it too is that the Bitcoin price has essentially doubled since the ETF has been announced. So I think that maybe the effects have already been priced in on that level. But yeah, won't talk about the Bitcoin price too much. It's too volatile.
On this game theory part that we just touched, how do you look at it? At this, you just mentioned El Salvador. Like I always think like, well, they were so at the bottom, right? Like nothing to lose. I think they're doing great, but it's not like a UAE country, right? Or it's not Canada, or it's not, I don't want to say serious country, but there's levels to this. I'm amazed that haven't been any other countries that publicly announced this, but maybe that's also not a good strategy, right? What are kind of your thoughts on this? And also like, what are consequences if you are late as a country to Bitcoin?
Yeah. So it seems like El Salvador itself is under a lot of pressure from the IMF to limit Bitcoin use. So I think that it might just be a problem that most of the world is being operated by bankers at the IMF who are dictating what they need to do. Maybe it's like there's two kinds of countries. There's countries that are controlled by the IMF, or it's countries that are controlled by, terrorists or criminals, looters. And so I think that maybe one of the paths forward for Bitcoin is going to be through the IMF itself, and that we need a Bitcoiner to take over the IMF and start requiring countries to adopt Bitcoin as their strategic reserve, right? Like that.
I love that.
It should be the other direction they should be going in, and that would actually be effective. So maybe that's kind of the problem with that plan. I think though that there are countries that are not beholden to the IMF. Specifically the oil and gas rich countries that have lots of energy, that are able to essentially bail themselves out and not have to rely on the IMF. But I don't think that it's going to be like the major vector of adoption. I think that's going to continue to be at the individual level. So maybe, it'll be years before we'll see another country really go the El Salvador route. I've heard of the Kingdom of Bhutan, that they have Bitcoin mining going on there and that they hold some Bitcoin. But yeah.
Yeah, I think it also takes some time. Like a country is also comprised of the individuals leading it, right? And they have to see it first. But do you think, like with the tensions of like BRICS expanding, maybe having their own currency, it seems like there should be some sort of inflection point with Bitcoin at the center of that, or is that too much hope here?
Well, I think that a lot of those initiatives are really about strengthening their currency relative to the dollar. And so I'd say the same for kind of the Euro project. It's not so much that they're looking for alternatives to the dollar, as they want to be able to capture more of the seigniorage, right? They want to capture more of the value because in a dollar system, it's a huge amount of seigniorage revenue that goes to the United States, and it's great for the U.S., but for the rest of the world, they're not, and they don't want to get rid of seigniorage. They just want to be able to have it themselves, exactly. And for those governments to use that to get more resources. And so I think that that's probably negative for Bitcoin, but it comes down to the decisions that their citizens are going to make around, okay, do I want to get diluted out of my money or not? That there's so much access to Bitcoin, even in jurisdictions where it's illegal, right? That you're able to have black market Bitcoin and P2P transactions and all of this, and people mining Bitcoin in secret and all of that. So I think that there's ways to route around states that are hostile. But for the most part, I think that governments, including the US, are in a strange position where there's lots of voters that like Bitcoin, and there's no voters that like Keynesianism, in the sense that they will try to defend, or chartalism, defend the state's privilege to be the only currency issuer. That's not really something that gets a lot of votes. If
they would understand,
like, they're like, what do you, why, what are you talking about, right? That's like saying that, why should there be any monopoly? The monopoly has always been kind of a de facto situation, not a de jure situation of being forced. And so when that de facto situation changes, I don't think that in democratic countries that there can be a lot of opposition to it from the political system. In authoritarian countries, like China, they can ban things without necessarily having a constituency that they're doing it for other than themselves.
Yeah. I think the de facto term is interesting, right? So it's de facto, it's just there, basically, right? It's not forced, but it's also not voluntary, right?
Yeah.
I think that's what we have to keep in mind. But how do you then see, for example, these CBDCs? Like,
well,
they're going to be an easy sell to people to voluntarily adopt it.
Yeah, I mean, I think we got to keep in mind how we got to this de facto situation, which is that these currencies used to be gold and silver, and then they got rugged, and so it's not like anyone ever voted for what happened. So, like for example, here in the U.S., there was never a referendum about whether to not back the dollar with gold or not. And in fact, there's surveys that show that a third of Americans think the dollar is still on the gold standard. So it's almost like there's this momentum that is left over from the gold and silver era. And so then people don't really question the dollar as long as the inflation's not more than like 20% a year, which it's kind of crazy. But they don't know what they've lost under the gold standard. The other piece of it too that they do is that they find ways to drive down costs. And so, it's like, oh, well, let's import lots of cheap products from Asia or from China. And that way it'll seem like the dollar has not lost as much purchasing power as it has. And then, people get lead poisoning or they start putting microplastics in the food and all this stuff. So I think that it's a very insidious type of process, the inflation is, that can often be masked with decreased quality of goods and services.
I think what you just said at the end this is why Bitcoin is also so hard to grasp. Relating back to what we said at the beginning, it's so down to the core. It's overly simplistic. Its role, what it produces, and after that, come the profound effects from having something that is so stable like Bitcoin. But the money system that we live in is just such a big, I don't know, bucket of sludge that we get fed like from the day we can watch TV as children, or that we can go to the store with our little coins and bills. And I think that is the battle that we are up against. I didn't know that stat about people still thinking it's backed by gold, but yeah. Wow. Okay. That's, I think that illustrates the size of the battle that we are in. Yeah.
Well, yes and no, in the sense that the price signals are what are going to educate people the most. And so I think that we're still in early days on Bitcoin for that. Essentially, that we might look at a price chart and say, oh, all of the value appreciation already happened, right? So there's bears who are like, oh, it's already. But I think that when we look at where we are in adoption, I have to disagree. I think most of the value appreciation is ahead of us, and that it'll continue to take us by surprise. People are over-indexing on the fact that the previous cycle was during a rate tightening cycle for the U.S. dollar, and that now we're entering into a cycle where we have rate loosening, and people are outside of Bitcoin are watching the Bitcoin price. And so when it starts hitting all-time highs again, that's going to do a lot of education for folks, far more than we ever will be able to.
The example that I loved is, this list of most valuable assets in the world, right? With gold at number one, and you see Bitcoin like moving between Meta and Google or whatever. It was, at one point we passed silver, right?
Yeah.
And so everyone from when they were young were taught, if you want to store something valuable, it's gold and silver, right? But at that point, it was gold, Bitcoin, silver. And I love to get to a place where that narrative really changes, right? Like, let's say if we are at 100K, we are far above silver. So that entire narrative, the gold and silver, keep gold and silver narrative, will be shattered in, a foundational way, in the sense that, like, it's not a not a opinion, right? It's just straight facts. And I think that will do a lot as well, of course, over time. But yeah, I agree with you. Like we have the biggest part still ahead of us. So how do you then look at like this, like the strategic Bitcoin reserve legislation that Cynthia Lummis, a U.S. senator, wants to propose? Do you think it will make it, or is it just like a good way to draw out politicians to make a real stance on Bitcoin?
I think both. I think that as long as the United States does not collapse somehow or get nuked, that it inevitably will have a strategic Bitcoin reserve at some point or another, and that this bill, I think, is the best way I've ever seen. Oh, sorry. To be able to accomplish that. But the other point that you make, I think, is also really important, which is that this is a way of educating folks in a direct manner. So historically here in the US, when we educate about Bitcoin, it's talking about either two topics. One, Bitcoin mining and the energy consumption and that whole topic. The second is anti-money laundering, KYC, and criminal use of Bitcoin. So those have historically been the only two political topics discussed here in the US. With a strategic Bitcoin reserve, we introduce a third topic: should you buy Bitcoin or not? Which I think is a far stronger topic for us to lean in on than the other two. And that I think it's the most important conversation to be having, especially because politicians are the most influential people in society today, whether we like it or not. They are mega celebrities, and everybody knows about what's going on with the president and all that. So having them on stage saying, hey, Bitcoin's great, that's hugely influential. And it also, with politicians, there's the audience of voters, but we also have to remember that there's the audience of the political party and the audience of other elected officials that are in that political party or not. And so when somebody watches, for example, Trump's speech in Nashville, that was watched by politicians that are at the state level here in Texas, for example, right, who are Republicans, who are like, okay, they're being reprogrammed, right? Now they're saying, okay, Bitcoin good. Okay, Trump say Bitcoin good. All right, Bitcoin good. We used to think Bitcoin bad, but now we think Bitcoin good because Trump said Bitcoin good. Yeah. And you never want to disagree with, the leader of the party. Like, you have to toe the party line. And so I think that part of the strategic Bitcoin reserve is essentially educating people from, at every level of society about, hey, this is actually a great idea that the government should hold some Bitcoin. And then, of course, they'd be like, well, I don't have to wait for the government to do it. I can go and do that for myself. And I want to learn more about Bitcoin. And this is very interesting. And so I think that it's going, we used to talk about the halving being the trigger for the bull market. And I still think that there's a lot of truth to that, but maybe just word of mouth, viral social marketing is going to be the start of bull markets going forward.
Yeah, I agree. And why I said, drawing out existing politicians, I think it's super easy to be pro Bitcoin because you can explain it in a good and rational way, right? But if you are against Bitcoin, as Michael Saylor says, there are no informed critiques, right? So how are you going to argue against Bitcoin in a way that doesn't make you look like a dummy against the people that are pro Bitcoin? And I would love to see that play out. right?
Yeah, like I could try to steelman that. I mean, like if I was on their side, here's what I would say is that, hey, look, we live in a democracy. The money should be controlled by the people through the democratic process. This is the legitimate way of, getting everybody's input and coming to a consensus on what we should be doing with money in society. And Bitcoin is essentially, removing that from the collective decision-making process, which we think gets better results than kind of the individualistic decision-making process. And that if we want to be able to pay for good schools, it's a lot easier to print the money than to have to tax it all out of the system. So, that.
Okay, I love that. I would agree with you on like first premise if you would share that. But, and I think it's good you did this, by the way. What I love is that based on that, questions will be asked, right? What happens if you print money? What's the point of the Federal Reserve? Who's in charge of the Federal Reserve, right? So it's kind of like this trap. So yes, I would agree.
It's also but I'm still paying taxes. So like, where's the money going?
Yeah, right. Why do I pay taxes if you can print it? Yeah,
right. Yeah. So I think to me, the biggest improvement with Bitcoin is the accountability of government. That because they'll have to get Bitcoin, I don't want to say voluntarily, but at least it'll take greater effort for them to get Bitcoin than it currently is to get fiat. Yep. But there's more accountability with how they spend it afterwards. But we'll see.
Well, and if we eventually get to a certain price valuation that shows that if your country sold the Bitcoin that they have or had, that was a very, very dumb idea. All right, let's finish up with with 3 short questions. I wanted to ask you, what is a spiky point of view you have on Bitcoin that not many people share with you?
That there's really no concerns about Bitcoin mining centralization. And so to me, Bitcoin mining is decentralized because it's permissionless, that anybody can mine. It's not decentralized because of some statistic of, this percentage or that percentage. And so I'd say the same thing about nodes. It's decentralized because anybody can run a node. Yep. And I'd say the same thing about private keys. It's decentralized because anybody can use their own private keys. Whether they end up choosing to or not is a completely different conversation than is it decentralized or not.
Yeah, so you basically say because everyone can do it, that is the most important.
Well, that's what defines whether it's decentralized or not. And that
not the who is doing it. Yeah.
Okay. Yeah.
That's a good point. People don't agree with you on that?
Well, people say, this mining pool has too big of a percentage of the hash rate, or too many people hold their Bitcoin at Coinbase, or too many people don't run their own node. Yeah. It's out there.
I agree. All right. What's the biggest challenge for Bitcoin in the next 10 years?
Wow, that's a great question. I think that the question of KYC AML is going to continue to be a problem until it gets removed here in the U.S. So it might be the case that the Supreme Court would actually get rid of the Bank Secrecy Act here in the U.S. Because the justices are so traditional constitutionalists that might happen. But short of that, there is a very robust framework out there that it seems like it's fundamentally incompatible with Bitcoin, and that they have to kind of rework things on their end. But in the meantime, they're going to continue to weaponize this system to attack people who are trying to buy Bitcoin. And we've seen this with this Operation Choke Point 2.0, right? The banking regulators are shutting down bank accounts relating to Bitcoin, Bitcoin businesses. So I think that's the biggest challenge, is going to be opening up access in the fiat banking system. What will perhaps end up happening is that it'll really swing in the other direction, in the sense that you'll be able to go to a traditional bank and buy and sell Bitcoin directly without having to open an account in an exchange.
I think then we would have really won.
Yeah.
Right at that point. Yeah. All right. Last question. And I ask everyone the same question, which is, what is a core belief that you will never let go?
Outside of the obvious ones, like, God and family, I think that people are fundamentally good. And so I think that's, that we're good but flawed, rather than, there's kind of the more pessimistic outlook out there of people are, terrible and that they're the worst. And so that's something that I'd hold on to, which I think is related to the virtue of hope, which is one that is very prominent in Bitcoin and very important.
Awesome, man. Well, thanks for sharing and thanks for your time. Really enjoyed the conversation. I will link to, all your profiles online so people can follow you, your thoughts and your writings. And yeah, man, thanks again.
Hey, thanks for having me on.
Cheers.
Cheers. Bye.
Thanks for watching. If you enjoyed this episode, you can click here to find more just like it. And you can click here to find all Bitcoin for Millennials podcast episodes. I want to thank you again for watching. I appreciate your support, and I'll catch you in the next episode. Bye.